Welcome to today's market report. European stock markets weakened on Thursday amid resurgent worries over higher bond yields and extended equity valuations on a busy day for earnings. DAX in Germany traded 0.5% lower, CAC 40 fell 0.2%, FTSE 100 dropped 0.8%. European markets received a weak handover from Asia, and before that, Wall Street following more gains in US Treasury yields, with the benchmark 10-year yield climbing to a high of 1.49% on Wednesday before retreating slightly. Yields of major European government bonds, with German bonds being the main example, have also risen, but by less than their American counterparts, amid some mixed signalling from the European Central Bank over whether or not it needs to react. Rising yields lessen the attractiveness of stocks whose expected profits lie far in the future. Federal Reserve Chairman Jerome Powell will also be in focus. He is due to speak at a conference at 5 o'clock London time, and investors will look to see if he tries to downplay the recent volatility. In corporate news, Lufthansa stock fell 1.2% after the German airline posted record losses for 2020, adding that it may permanently ground more planes to emerge leaner from the coronavirus pandemic. It now says it expects to fly no more than half its pre-pandemic schedule this year, down from an earlier estimate of 60%. Merck stock rose 1.4% after the German drugmaker offered a solid outlook for 2021, expecting earnings to grow in the high single-digit to low teens percentage range. Aviva stock climbed 3.6% after the UK insurer agreed to sell its Italian business and pay down £800 million of debt, while Schroders stock dropped 1.6% despite the UK-based money manager reporting record levels of assets under management. Eurozone retail sales for January are due later in the session. Oil prices climbed higher on Thursday as traders positioned themselves ahead of a meeting of the OPEC and allies grouping known as APEC Plus. Crude futures traded 0.3% higher at $61.48 per barrel. Brent rose 0.4% to $64.33 per barrel. Gold futures fell 0.2% to $1,712.80 per ounce. On the FX front, the GBP-USD pair quickly retreated around 35 to 40 pips from the early European session highs and dropped to fresh daily lows around 139.30 to 139.25 region in the last hour. The pair struggled to capitalize on its intraday uptick, rather met with some fresh supply near the 139.65 to 139.70 region, and was pressured by sustained US dollar buying interest. Investors remained optimistic about the prospects for a relatively stronger US economic recovery amid the progress on the COVID-19 vaccinations and the fiscal spending plan. The upbeat US economic outlook continued underpinning the US dollar, which in turn was seen as a key factor that exerted some pressure on the GBP-USD pair. The reflation trade has been fueling expectations for a possible uptick in the US inflation and raised doubts that the Fed would retain ultra-low interest rate for a long period of time. This, along with the cautious mood around the equity markets, further benefited the greenback's relative safe haven status against its British pound counterpart. That said, a modest pullback in the US Treasury bond yields held the US dollar bulls from placing aggressive bets and helped limit any further losses for the GBP-USD pair, at least for now. The sterling was further supported by expectations that the UK government's plan to end lockdown restrictions by 21st of June would lead to a swift economic recovery. That said, the lack of any meaningful buyer interest and repeated failed attempts to move back above the key 140 psychological mark suggests that the positive news is fully priced in. Investors might refrain from placing aggressive bets, rather prefer to wait on the sidelines ahead of the Fed Chair Jerome Powell's scheduled speech later. Powell's comments on the risk of a rapid rise in long-term borrowing costs will drive the US bond yields and influence the US dollar price dynamics. This would eventually allow traders to grab some short-term opportunities. Sluggish euro-dollar rebound reflects a slower distribution of both recovery funds and COVID vaccines. Economists believe that the 119.50 to 123.50 range is likely to persist into the European Central Bank meeting on March the 11th. At the time of speaking, euro-dollar traded at 120, dollar index was at 91. This is today's market news. Thanks for listening. We'll see you next time.